Alright, let's try this one more time. Sharing the link with a few people that have been asking specifically for this. Today I'm going to make sure and cover SPX a little bit too. Let's see. Just a second, we'll get started. Here, because everyone is welcome. And if there's any specific tickers y'all want me to take a look at, throw them in the YouTube live stream chat, and I'll try to take a look at those as well. Let me switch screens and monitors and keyboards real quick. All right, jump over here, get rid of this for a second. We're gonna jump straight to SPX and I'll show you kind of some of the stuff. And this is busy chart. I'm about to show you some of the levels we were watching here. This never broke, so we stopped watching it, but I'll talk through some of the stuff. Let me also over here on the side pull up some of the Tony said, can you go for how much? I can quit sucking so much. So no, dude, you got this. SPX. So a lot of people are asking with trading SPX, making decisions on, and just for others joining, still going to cover any other tickers too, but wanted to make sure and touch base really quick on SPX. So I think some people took some trades today, some made gains, others kind of stayed in too long on stuff, and green went to red, or they entered on something after a move had taken place. So I'm gonna speak about this more generic a little bit, just because I know that there's people in here on the live stream that aren't also in either of the discords where I alerted some of the SPX alerts, but just want to kind of call out, if you are kind of following along for the sake of alert's sake or whatever, always check, and this is true for most people that are alerting, if it goes beyond, for instance on my alerts where I'm looking at an SPX put that shows an entry range between $3 and $5.20, and my cost was $5.14. If it goes beyond the $5.20 max range, don't enter the trade, don't chase the trade. Not saying it can't still work out, but it's beyond the movement range for the entry, and therefore not a good place to go ahead and try to enter. Let me look at the time that I traded each of those, just because I want to give some good examples of like where people could have taken gains or should have taken gains accordingly. But on 5 minute, 15 minute, kind of talking through a little bit more what I posted with the SPX strategy that seems to be working really well with both calls and puts, is using the 5 and 15 minute here, looking at the supply and demand or support and resistance zones. Sure, there's a lot here on this chart, but that's because I was watching multiple different time frames. Some of these are from previous setups. Also similar to yesterday's setup where we got the breakdown of that trend line. Let's look at that one because that's a good example. Because this one, it was a quick little trade, and really the target price that I would recommend, aside from moving as a dynamic stop, once something's up, say 10 points, then, or 10% if you're trading an option, I guess, depending on the option, because it's really hard to target a stop loss based on option premiums on something that's moving quickly. You can calculate and do the math if you want, but even then it's going to be really hard. So typically, Harmon said, tell me we're going down tomorrow. I don't know. There's no way of knowing. We'll find out, right? I do think that, and we'll look at it here in a second on QQQ SPY, some of the big tech tickers. We're getting a much needed retracement bounce, but that doesn't mean that we're out of the woods yet. So you won't see me swinging calls or anything like that. On big tech, if people are doing it, that's great. Roll with it if it works for you. For me, I prefer to wait till there's a confirmation reversal. I can jump in and still make the gains on the trade if it makes sense, but the premiums are really, really wacky on calls at the moment with the indexes, the ETFs, and most of big tech. We're looking multiple times throughout the day today at calls being sold heavy into resistance levels on a lot of big tech tickers. So sorry, kind of switching over from the SPX topic a bit there, but wanted to talk back through this a little bit. So SPX, one thing that seems to work well with SPX is small position sizing. And again, SPX is not for everyone. Small position sizing and protecting your capital and locking your gains early. So if I stay in something that is very long throughout the day, like I did a couple of puts yesterday, I'd already covered my cost basis. I rode the remainder of the contracts just throughout the day because I saw some weird movement going on with the options chains. You can see today we didn't get as strong of a break, but that's why I didn't really alert or enter anything else here in the afternoon session, because we're in a consolidation zone to where this bull flag could either break out to the upside or this head and shoulders that's in play here could have broke down to the downside, which it's interesting to see a bit now. I think I already removed it off the SPY chart too, but the head and shoulders actually broke the neckline, and then we caught a bounce off that next support level. So if I was in puts on SPX, how would I go about setting stop losses or taking gains? For one, whenever this broke to the downside, and which puts was I in for this move? Because I didn't even alert these because the risk was way too high. Stevie said, so did you expect to only go 10-20% move and be happy to exit? So let me say this, and this goes true for SPX as well as for any kind of options in general that people are trading. 5% to 10% gains consistently compounds to significant growth of an account over time. So consistency is key. What that means is if you go ahead and take gains on SPX on 20% gains or something, then yes, it does hurt a bit whenever you see those go 1,300% gains like we saw some yesterday. That being said, the approach of actually setting a stop loss once a lot of those SPX options, for instance, rip 20%, 30% within seconds of entry, that's why it's really hard for people to enter based off of other alerts unless they're actively monitoring their self. That's also why I'm a big fan of kind of showing y'all how to go about trading the things on your own if you choose to. But SPX is really a different monster altogether just because the underlying is moving hundreds of dollars potentially in a given day, and your options premiums are moving based off of the delta of $1 moves on the underlying stock, right? So if I move $100, it's delta times 100 effectively is oversimplification, but that's sort of how it works. So, oh cool, 12's in too. So yes, to your question, 10 to 20% and happy to exit. If you set a stop loss, if it gets triggered at 20%, so be it. That's 20% gains is still solid gains. And I will do that on a lot of my trades. I can tell you that if I don't do that, I end up getting burned. Maybe some of the trades end up working out over time, but ultimately, if you're consistently taking gains on your trades, even if it's smaller gains of 5 to 20%, which again, not really small gains in the scheme of things. If you ask, it's so interesting to ask somebody that trades shares and options, and if you told somebody that they could have 20% gains on shares trading it, they would be super excited and ecstatic about that and would be all for it. But then you tell them 20% gains on options, they're like, yeah, I didn't lock my gains. And it's always interesting kind of to have the conversation because options can very much yield significant, huge gains, right? But if the name of the game is consistency and locking your gains, that would be what I would recommend. You can always re-enter a trade on a bounce, or if another trade presents itself and sets up, then you can trade it again accordingly, right? So yesterday, trade calls in the morning session. Wish I would have held those. Same thing earlier today. I wanted so badly, especially when we broke out of this inverse head and shoulders here, and I don't know if it's doing the thing to where y'all, I just realized on the video y'all can't see when I'm doing the little cursor thing here that makes the little circle. I'll have to figure out how to turn that on with the settings for the video, but basically when we were right here and broke out of this inverse head and shoulders to the upside, I wanted so badly to trade calls here, but the premiums were ridiculous, and the overhead, there was multiple resistance levels right overhead. I really didn't want to risk like $1,500 a contract for something that was within trading range, so I sat out of SPX calls. I scalped some cheap, very cheap puts on these rejection points once we had the confirmations, but sat out of trading calls on SPX today, and a little disappointed on it because I could have made big gains, especially on the 5,800 calls if I would just paid the expensive premium earlier on in the day. But this ties back with what me and 12 have been talking about a lot lately. Fastest. So when do you actually just fully go regard mode, Chase? I don't know what you mean there. Yeah, Armin said that 11,000% SPX lotto yesterday was great. Yeah, that was nuts. Like I told people multiple times today, though, I don't expect 100-point moves on SPX across a 30-minute time span to happen ever. Like, if it happens, so be it, but I don't expect that big of a move to take place. So whenever it did break the trend to the downside, had momentum. Also, I know that this is not, maybe it'll show yesterday's too. Here, let me scroll down so y'all can see. I just realized y'all can't see. Let me switch screens real quick. All right, y'all can see that now. So yesterday, whenever SPY broke to the downside, right here. So what happened there, and I posted this kind of in that recap a little bit, but I want to show you because this will explain it a bit more. So when SPY broke to that downside yesterday, when it broke that trend, you also had this heavy negative gamma exposure here. So what happens is once you're in that area and selling occurs, market makers have to sell off more shares to hedge accordingly. So that added to selling momentum, which is where this increased liquidity came into play. And then to make it worse, we tagged this 800 or 580 level right on SPY, which you can go look at the corresponding levels on QQQ and SPX and see something very similar. But we got into this range right here where there was another huge gamma exposure level. So what happened was once we got into that level, those market makers had to offload and start selling shares. And then you can see that that caused a huge imbalance, right? And we dove to the next support level, which coincidentally also happens to be where the next big gamma zone was. So luckily, buyer stepped in, we caught the bounce, but that was right at close. Right, so you can see right there we closed where we did. After hours, things kind of simmered down a bit, but right there, that big drop is exactly what you see right here on the chart. So if you were looking at the gamma levels, we broke down to the downside and then we kind of consolidated a little bit once it tagged into that gamma zone that we just looked at. And then those market makers had to come in and sell the shares to offload and de-risk. And when that happened, that threw this gap and everything on the 5-minute. This move right here of over almost $60 move or 60-point move on SPX occurred in a very, very small time period. That's literally across 5 to 10 minutes that occurred. So that caused a massive move on SPX puts that we entered later in the day. Yeah, 12 called it out great what he's got over here too. The like rolling stops throughout the day, every 20% is definitely good practice. Y'all have seen that if I'm alerting any kind of swings or anything in general, I recommend as soon as you're at 5% or more, set your stop loss at 5% gain, because 5% gain is better than letting a green trade go red. And that is definitely a good practice for newer people. I know that especially for new people, you see the huge gains, you want the huge gains. You get frustrated once you see something sell for maybe 10, 20, 30%, and then later on you see that same trade go 200% or more. I get it. It can be frustrating, but have patience with yourself. Take the time to sort of focus on scaling and having consistency, and then get into the practice that a lot of us do where maybe we buy multiple contracts once our account size supports it. And maybe we have 5 contracts of something, we sell a portion of those contracts to cover the cost basis of the entire 5 contracts, and then we ride 1 or 2 or more runners at that point that basically are almost on the house to some extent, right? You're not worried about taking a loss overall. Yes, you're foregoing potential profits, but you can still set a stop loss just a bit more flexible on that runner position that you're in. So, and I get FOMO when that happens, just like everyone else. Hood yesterday was a good example of that. Let me show you that really quick, and then we'll dive into some of the actual tickers y'all are requesting. But entered Hood calls. Y'all saw them yesterday, the $48 calls. Entered them in the morning session with the bounce and the reversal on the 15-minute and 1 hour because I saw the flows. Somebody was loading up for an actual bullish move and selling cash secured puts at the same time. So got in those $48 calls. I trimmed and locked my gains here. Partially because I was sidetracked and distracted with the SPX, but also it was solid gains. So I locked my gains at the next overhead resistance level, which is a good way to look at your price targets. I'd have to go look and see what the target was that I posted on there. I know that the final target of the 3 price targets to the upside for those calls was 48.15. So you can see here, oddly enough, you know what? Here, I don't want people to feel like that's like some BS. So where is... We're going to be real transparent here. I hide this. That didn't do it. You still can't see it. Let me try this. Still not happening. There we go. Now you can see it. Okay, cool. So I just want to be clear because I don't want there to be questionability of that just in general because y'all know I keep it real. Bullish, bearish, doesn't matter. Like we're going to keep it real. So on those Hood calls, price target, right? First price target was 43.83. Second price target, 45.56. Final target, your strike and beyond, 48.15. That was the target. So what I did, let me jump back over, is I locked my gains, and this is kind of good practice in general for y'all that are learning at those corresponding levels, right? So looking at Hood, I locked my gains there. Like I said, I was sidetracked with the others, so I didn't even hold out and go to the next levels. This gap is actually filled now, so I'm going to go ahead and mark it, but it perfectly tagged that 48.15 level. And why I wanted to show this and talk through this example is because when I say I had FOMO too, those calls that I sold for, I forget what it is, I'd have to look. I mean, I made probably 30 to 80% gains, give or take, somewhere in there. I took those gains. I was in, I think, 10 contracts. Well, those that I took, let's say 30% gains, they hit 252% gains right here. So had I held through my final price target or taken my normal approach where I was in 10 contracts, I could have sold 7 of them and covered my cost basis and then some net profit and rode 3 and then rode it, to the next level up and set a stop loss accordingly as I broke down from levels. Let's see. Oh, somebody, spammers on Facebook, it seems. But yeah, so walk through that example, and now let me jump over real quick to some of these tickers y'all are requesting. I'm gonna start with the STS because that one has a wacky movement. I know we made some gains on the calls this morning. I went and locked my gains. Another example where I'm gonna have some FOMO. But check this thing out. This is one that is very volatile and can rip. I saw the backtest bounce here and then saw some very interesting movement over on one of the screeners for calls. And I decided to go ahead and hop in because I like the setup in general. And what happened was we entered those calls this morning. If you look at it, nice, solid breakout to the upside and continuation, right? So don't know what those calls ended up running to today. I need to go back and look, but STS looking good. I think I posted the levels to watch, but really this thing could push hard and fast up to 36.87. If it breaks out to the upside above that, there's a larger time frame bull flag going on right here that could, man, now I'm really having FOMO. Now I really need to go add calls for this thing again tomorrow. I will tell you all the premiums are spiked on it because it's been so rapid and volatile, but looking at this now, I'm realizing I should have just rode them out because actually I'm going to probably get some 321 calls, but that is, no, I would not even expect a 724% gain move, but technically from the technicals, that is what is in play there. I'm gonna do this way more conservative, and even then it's gonna be nuts just because the movement range on this. Yeah, it's still like a 500% point move. So yeah, keep an eye. Good example. I'm glad you brought that up, Fastest. Everyone keep an eye on this ticker because especially post earnings, strong buying volume here. ASTS has potential to rocket off these levels. So someone remind me. Actually, I'm gonna put it over here on my list to check that tomorrow for long term. I might actually even buy calls on it and sell covered calls to hedge or something. But yeah, this thing looks like it wants to rip. Other tickers. I posted detailed analysis for a lot of big tech tickers. So, James, let me glance at a couple of these really quick because it's going to tie back with SMCI as well as Meta. Hey, you're smart to lock the weeklies like that, Fastest. Like, gains are gains, man. And the last time I traded ASTS, I think the same thing happened. I forget when it was. I'd have to go back and look, but I took my gains and then they ended up going like several 100% gains that week. So I had some FOMO that week as well. But doing the smart thing, locking gains, protecting capital is always the right thing to do. Even though I'm really going to regret it when I look at what those calls ended up hitting today. But it is what it is. So what did I say earlier, or what did I mean earlier when I was talking about being careful here on big tech and most other things? So it's very easy to lean in on our inner bullish bias on a lot of these stocks, and especially when something appears like it is starting to print a reversal pattern here, because it is most certainly attempting to. We're still in a downtrend at the moment, though, on QQQ, SPY, multiple tech tickers. And what is the formal definition of a downtrend? It is until you have a new higher high above the previous lower high, right? So if we're looking at this on the daily, for instance, I've got my high here. I've got my next low. I've got my next high, if you want to call it that. We'll call it that if you want. And then I've got my next low or low, and then lower high, lower low, until we form a new high above this level. This is still a downtrend. So yes, this bullish volume here with the buy and potential reversal is fantastic. Keep in mind, though, where we currently are with the market, where things are with tariffs, where things are from a macro level. This is a dangerous spot to try to jump in and catch the very bottom of a given bounce. If you have lots of unlimited money flow and want to keep on trying to add to something, go for it. Shares are definitely less susceptible to pain in this type of setup by dollar cost averaging. Not a big fan of recommending dollar cost averaging of longer term calls on big tech tickers to people because the premiums can get just wrecked so fast, especially right now where the implied volatility on options is insane because of all the rapid movement we've had the last few weeks. And you will see that even if, for instance, QQQ tomorrow was to open where we closed today, those contracts are going to be down significantly from where we closed those contracts today. So whether it's a pullback or trading flat, both of those things burn contracts. You start to see it a bit more once you get in a situation where you start selling premiums instead of just purely buying options. It's the same reason I've not traded Tesla swings as a buyer. Same thing, I haven't traded Nvidia swings as a buyer of options, yet I've sold covered calls on both of those over the last few months. So yeah, I mean, like Pearl's saying, not worth it to play the options with incredible premiums. Absolutely agree. There's lots of cheaper tickers that maybe aren't so IV spiked and whacked out right now that have more solid setups that aren't as exposed and impacted by, a slight tweet related tariffs. So I would highly recommend, broaden out from what you're normally used to trading. I know a lot of y'all the last 12, 18, 24 months have got really in the habit of swing calls on big tech, and totally agree with historically over time, the markets tend to go up, right? It's a fact. Totally agree with that longer term. That being said, your options that you're YOLOing into or trying to average in on these bounces like this, on these types of tickers, they don't care. The premiums will get wrecked just the same. So even if it's something like, I know I watched multiple people in AMD calls since October where they entered premiums that were 6, 9, some were in 12 months out. And I know right now, let me look, because I've got them over here saved. And it sucks that people, you know, lean in too hard on the bullish bias, which I've been there, so I can totally relate. But let me find the AMD calls. So AMD, wow, okay. So added these several months ago, 620, 150 AMD calls. So these things literally from October that these people bought, and sure, you could have averaged down, but they bought these for $4,000 a contract. Those contracts are worth $81 right now. There's no guarantees that something is going to bounce, right? So definitely just be careful. Leaps are no guarantee by any means. Leaps are definitely better than trying to trade weeklies or 2 week swings. Normally, if I'm swinging something, like it's really got to make sense from a risk to reward standpoint. And what I mean by that is, what's my gain potential based off of how much the contract cost. So y'all have seen me trade like $400 contracts on SPX. Yes, that's an expensive contract. However, y'all have seen the reward potential of those be 1,000% or more. So risk to reward makes sense depending on the context in the given situation. If you were to trade a $400 or $500 contract on something like Nvidia or Tesla, you may yield 30% gains, but you're taking a hell of a lot of risk by holding something like that overnight right now, given the current market climate. So that's why I just can't really recommend it. And it's not a calls versus puts thing, because anybody that's been on the stream or in any of the channels that you can follow me, or for months, I've advocated against trading calls and puts on a lot of these tickers. So it's not a bullish versus bearish thing. It's a premiums have to make sense thing. Like I said, I posted more detailed analysis for a lot of things. But ultimately, a lot of the big tech tickers are currently in a retracement bounce and attempting to hold support levels. But we need to see follow through confirmation, especially with the weekly candles, because the weekly candles have potential to kind of go either direction at the given time. Weekly wise, right there is not looking so hot, right? We already broke an uptrend on Nvidia, so really I would love to see it hold over that 114.78 level on the weekly. Even better if we can hold over 117.22. I actually need to sell more covered calls on Nvidia. Same thing with Tesla. I bought to close some of my covered calls on Tesla, so I'm really hoping for a retracement bounce on Tesla here, but also knowing good and well that Tesla very likely will head to fill that 255.28 gap there. So I don't know why that is there twice, but looking over a Meta real quick, because I know that was specifically requested from James. So James, Meta has come back and has retested this previous supply zone as a demand zone. So you can see it's caused bounce at the support here, but same thing as what I mentioned on the others. There's a lot of risk going on with Meta still here. What I normally recommend for people, especially with a lot of these big tech tickers, is, and this is going to apply for those of you that have 100 shares or more. So you can hedge with covered calls on big green days. I think where a lot of people mistake and really kind of get heartburn towards selling premiums like covered calls is they see a big drop and they start to try to sell a covered call on a big red day, and that's not a great thing because the premiums are not in your favor as the option seller to do that. So what I would do instead is, let's say I had 100 shares in Meta and I wanted to hedge my position accordingly, right? On this rejection at this key resistance level, that is a good place during that day to sell covered calls before the drop or before a rejection occurs. If it breaks the upside, that's great, that's fine. You can still ride it out, because as you can see here, it ended up rejecting again and moved lower. You would be up quite a bit on gains with those covered calls at this point, which also serves as a way, because you collect the premium either way. So you would be collecting the premium for the call sold, as well as any of the pullback in that range. Let's say, real quick on Tesla, say at $300, just to keep things round numbered. If you sold a call for $5,000, a covered call, and your $300 is what the share price is, let's say your cost basis is $260. I don't know, like throwing random numbers out there. Sorry if this is confusing. But let's say you sold a $50 or a call for $50 premium, or $5,000 total, right? for Tesla. Basically, if you sold it at $300, you basically have a $50 cushion there of dropping down to 250, and in between 300 and 250, anything that you're losing on your share value in that range is offset with the call premium. So if you follow what I'm saying, even better as a call or option seller, if you are trading flat and range bound, and say my value of my shares maintains around where we currently are, then I can basically the decay that occurs on those options is going to make it to where you can buy to close the premiums later on, net the gain on both sides, or ride it to expiration if you wanted to. James, to answer your question, I've got like a detailed breakdown of kind of what I focus in on selling call premiums. Cash secured puts too. Typically, I'm focusing in on 30 to 45 days out expirations. Reason being is the theta decay ramp gets significant at that point, which is the same thing that y'all see if you trade short-term options as a buyer, right? Is the theta decay ramps up more and more, your premiums are decaying as well. So if you do that, you sell it right before the theta decay begins to ramp up, and as those premiums get slammed by theta decay and start to take hits with the broader movement, then the value drops, and therefore you're left with a situation where you can choose to sell, or buy to close the position, releasing your shares, or you can ride it out. So yeah, it's worked really well with Tesla and Nvidia for a long time now, so definitely a good approach. Anyone that's long-term holding of stuff, it's always a good idea to hedge. You can also hedge with shorter-term puts if you wanted to against your call or against your shares. If you don't have enough or don't want to sell covered calls against them, you can sell a put, and I'm not going to get into the details of like which specific ones necessarily to go with, because that's going to vary significantly by stock and by the price range and by multiple other factors that could impact the premiums. But just calling it out that don't be scared to hedge accordingly for longer term holdings of positions by buying puts. And y'all see that on a lot of the analysis I post now, I'm pulling into the model the recommendation to hedge with put options or covered calls if you're in a longer term hold. Typically my recommendation is going to call out if you see a rejection. For instance, I'm looking at Amazon right now. If it was to reject at 214 to 216, then that would be a good spot to hedge accordingly. So you can see Amazon, which completed perfect downside measured move there. So I probably can delete that, I guess, at this point. But Amazon, if it goes back up here and rejects at that 214 level again, that would be a good spot to sell covered calls on Amazon shares. I'm optimistic that Amazon can actually bounce here maybe and push up, but it's at the mercy of the broader tech market, just like everything else is right now. Still in a downtrend, still really struggling at this point. So while that could be presented as a reversal candle, it also can very much be a short-term retracement bounce that gets rejected and we move lower. So just stay vigilant, be careful in a lot of these trades people are in. Let me pull this up because I got people asking me questions over here. 12 says preach it. Meta, did I click Meta? I don't know if I clicked Meta. Yeah, I did click Meta because we talked about that a little bit. SMCI, I just not a big fan of it. Like, I know that people are hyped, and like this right here is your textbook example of like sell the news, right? So their filing deadline was what, last week, and it got that big pop overnight over actually filing their questionable accounting and whatnot. But then it sold off hard ever since, and now it's caught up with the broader tech market and semiconductors taking a dip. So I personally won't long this stock just because I think there's still some questionable stuff on it, and I have a hard time with really getting backing long on something like this. That being said, like I'll maintain a unbiased opinion on like the charting and technicals here, right? So definitely keep an eye on these levels. You can see they're all here. Let me see what other tickers are on the list over here because I want to make sure I cover all the ones that need to be covered. Yeah, they're over here talking about the Robinhood game thing. Yeah, I got basically kicked on question 3 because it wouldn't let me select the answer, which was stupid. So like, even though I didn't go past the time, there was 2 seconds left. It wouldn't let me select the answer, so I could not actually complete or like play the game for the prize, which ended up being pretty significant. It looks like. So yeah, that's good. Crypto real quick, because I know a few people have been asking. Where's my crypto list? So what have I been saying for months, right? I will be concerned about Bitcoin when we start having weekly candles. Important note there. Weekly candles close below the 87K level, especially, right? If we get weekly candles even below the 90, maybe I get a little bit concerned, but weekly candles closing below like that 87 to 90K range is the primary area that really I would be concerned about. As you can see here, looking at the weekly, we do hella wicks and then we get big bounces. So, and that came in, I don't know if anybody saw that or was messing with it this weekend, but that was part of the new stuff that the government pushed out for the new ETF thing. So if you look here at the weekly though, as of right now, we closed our weekly back above the key level. So as of right now, Bitcoin is trying really hard to maintain the bullish setup on the larger time frame. The cup and handle is still valid. Definitely keeping an eye on this to see what happens from here. Bitcoin dominance started to take a bit of a dip, I thought, on the daily. Where is it? Oh, it recovered already. Wow. Yeah, it definitely did recover quick. So Bitcoin dominance is still looking strong. So alt season is not here yet. That being said, XRP, Solana, and several others got big moves this weekend. XRP was nuts. I don't know if anybody saw that, but it moved like 50% at one point on Sunday. Analyzer, I'll grab them now. Thanks for dropping it right there. Man, I didn't see it over there. Is it further up in the chat? Oh, my bad. I'm so sorry, guys. This thing was set to top chat, not live chat. There we go. All right, now I can see them. Let me pull those for you, and then we'll talk more about crypto. But XRP is still looking solid. There is a head and shoulders there, so keep an eye on that. Again, maintain as much as my inner bullish nature towards crypto is ridiculous. Maintain an unbiased opinion on looking at these charts. So head and shoulders is in play there, but so is the bull flag on the larger time frame. Let me jump over to a few of these tickers that you mentioned. So like Uber, I was actually looking at it earlier today and wishing I'd bought calls because that was a nice little upside move. Larger time frame though, let's look at it. So Uber is trying really hard to bounce here and take back to the upside. So I would watch to see, can it push back up above that falling wedge that's got going on right here. I don't know if y'all can tell, but that's a falling wedge. There you go. So watch it, especially with this kind of weaker buying volume here. It may be that this retraces and rejects. So watching Uber to see if it can break to the upside. Levels are still valid on it. BA. So BA is another one that I looked really hard at this morning because on two of my different screeners for options, it flagged calls. And then, sure enough, this crap happened during the day. So I don't know if y'all saw it this morning because I was tinkering with it on the live stream to where people could actually see it. But there was some BA calls that they interested me. I held off on it just because I was really busy trading other things, but it would have been a nice little quick day trade, even though I probably would have gone with like 2 or 3 week out calls. Would have been a nice little setup there. It looks like it's still very much kind of dropping right now, retraced and rejected at that resistance level, so keep an eye on that. Next on your list, we did Google. If you can go back and look at that one. So Hood, I'll do after Applied Digital. So Applied Digital is another one that it's dropping, but this is one of those cheaper tickers that risk to reward might make sense to enter earlier on. And before someone tries to call like inconsistency or whatever, there's a huge difference between trading a call on a $7.69 stock that is a swing option 6 months out as compared to trading a call on something like Nvidia or Microsoft or any of those others where you're going to pay significantly more per contract for those, and risk to reward is going to be out of whack in comparison. So just calling that out because I know somebody's going to mention it, whether here, Facebook, or something else. But Applied Digital, I want to see how it handles this back test here, because as of right now, it's back testing the same support range that it ripped off of previously. I want to see if it can catch a bounce, and I might actually enter some more longer term calls on Applied Digital, so definitely keep an eye on that. Hood, so Hood, if crypto's rocking, Hood's rocking, basically is what I can tell you. Still mad, I know we looked at Hood earlier, still salty that I sold my calls early on Hood that went 252% gains, but Hood is really trying to catch a bounce here. It looks like aftermarket maybe pulled back a little bit, but as of right now on Hood, it's trying to back test and hold that previous range. You can see it caught the bounce there off that level that was previously the supply zone, now become demand zone. So what I would be looking for more longer term holds on calls or something on Hood would be a breakout of one of these trends here with strong buying volume and momentum, because right now it's still in a downtrend at the moment. So just like we talked about some of the big tech, Hood is one of those ones that if you can get it right with some further out calls that make sense, it can be worth it. You just have to watch out because the volatility drives premiums up on it just the same. Lisbeth, yes, I will definitely check out AT&T and Walmart for you. Let me look at Palantir real quick, because Hood reminds me to look at Palantir, because Palantir I've been watching hardcore on this because I want to see if it can hold the support range and catch its bounce. Y'all know I love Palantir. I'm still in my shares since 1711. Looking to add new long-term calls, but I want confirmation of a higher high. It got really close to doing it today, but I want to see sustained movement and upside here. With all the global tensions going on, you've noticed that stuff like Lockheed Martin, RTX, other things that are, considered wartime stocks have been doing well. Palantir gets that sympathy play as well. So, 12 said that's the DJing calls. Yes, it is, sir. AT&T. So it got a hard rejection finally. It looks like yesterday, larger time frame. Let's see what we got going on. It was trying really hard to push up towards that measured move, but it looks like it stalled and hit a reversal here. So I'd be looking for a back test of right in there, which it looks like it's right about where it tried to get its bounce on. So watch here for a reversal. I'm still in some runner calls of those ones. They're currently up 95%. But again, they're runners. Cost basis have been covered. The risk to reward for kind of riding that out a little bit longer is worth it. They're currently at, like, they're bought for $113 each. They're currently at $221 each. So still doing good. If my cost basis wasn't covered on those already, I would probably be setting a stop loss to take the gains and just completely exit the position if this support is lost here at this level. So that is what is up with AT&T. Walmart, I swear, Unitonian yells Walmart. So Walmart's getting a back test of the longer term trend. Walmart's still an uptrend on the weekly here. Walmart's still an uptrend on the daily. It's treading water a little bit at the moment because if it does lose this support range, you've got some bearish indications going on here that could potentially pull it back. We'll see. One thing I would say to keep an eye on, I don't know when Walmart already had the earnings, keep an eye on Costco earnings, which I think is tomorrow, because that's probably going to have some sympathy impact on Walmart. So that's a good thing to keep an eye on. Definitely if it starts to reject, there's two approaches, right? So either if you're in calls or even if you're in shares and you want to lock and close the position completely and buy a stop loss, that works. Alternatively, if you're in a longer term position, whether it's shares or leap calls or something like that, you can consider whether or not it makes sense to buy a shorter term put to hedge for downside movement. Just a consideration you can keep in mind. So Maxwell, RGTI is going to be at the mercy of a lot of the AI and semiconductor movement, right? So RGTI broke this pennant to the downside. It's attempting a bounce here. When was their earnings? Today? What's it looking like in after hours? It's earnings after hours in the morning. Usually I get after hours. Okay, so I mean bad earnings, but that doesn't necessarily mean anything. Y'all have seen with good earnings, stuff can still drop, right? So RGTI, maybe if it catches a bounce at 628 and the broader tech sector starts to get some upside momentum to confirm a reversal, if AI and quantum stuff gets some sympathy, RGTI could be a good one to enter maybe some calls or cheap shares on. I'd just tread carefully on this if I was going to. This thing's volatile and can bounce and move big, but I think a lot of the quantum computing stuff kind of got squashed a bit the last couple of months. So keep an eye on that. Yeah, Steve, I see. Yeah, see where they missed right here. Damn, they hella missed earnings. Which I don't think's too big. Apparently, it's a shocker for these people, but I don't think it's too big of a shocker for most people in the broader market, just because this thing only ripped based off of sympathy with AI and quantum stuff the last few months. Let's see, did I cover everybody's in the chat, or consider closing this thing out? We looked at Hood. We looked at that. We looked at that. Did Invis, how'd their earnings play out? Invis is on my radar because that thing's a true short squeeze candidate. So, what they did, reschedule their earnings? Anybody know? I'll check. These are filings from yesterday. So here's something that's interesting on Invis. For those that haven't been following along, hella high short squeeze candidate if it gets some buying volume, which is what happened back over here where we had this massive 30% candle. It's happened multiple times whenever it does get buying volume and pressure. It's showing the earnings now. I don't understand what just happened, but did they have earnings or did they not have earnings? Like, where are we at, guys? I'll have to go do an analysis. Yeah, we had it. Yeah, I'll go back and I'll look at Invis because I'm probably going to add some longer term calls. Cyberboy, what missed calls? She was talking about RGTI. Hey, that Netflix playlist is legit, right, Nick? It's not for everybody, but it goes hard. Sorry, got sidetracked from his comment there. Cyberboy, I need to. There we go. Other takers. Let me see. Yeah, Lisbeth, I got you covered already on that one, so I'll move your message you got here. Let's see. Every time I see these really odd Discord names, it makes me just suspect spammer at this point. Like Captivating Lemur. Like when they start getting really descriptive with it. Let's see, other tickers. SoFi. So SoFi. So SoFi is bouncing off that level that we've been watching, right? So SoFi, ideally, you can see took that big dip earlier on in the session, but what I've been watching on SoFi is weekly candles closing above that 13. Do this so you can see it really well. Weekly candles closing above, especially that 1301 level that we've been monitoring, as well as 1343. I'm sorry, 1343 is that one. Can't see apparently. So I would really like to see it back above 1372, but there's a reason why you haven't seen me adding additional calls to this yet. We need to see confirmation reversal. Again, another example of it's a little bit better and okay for, phasing into some longer term calls on something like SoFi that's way under $100 per call option as compared to something like Nvidia, Tesla, Apple, so on and so forth. So taking it lightly, don't feel like you have to rush to phase into longer term stuff. Take it super light. What else do we have over here on ticker list? Yeah, I'll look at it for you. So, yeah, Nike is approaching earnings, and this is again why I don't YOLO heavy on Nike until we get confirmation and stuff. So, like, yeah, it broke out of that downtrend and that falling wedge there, but it's back testing and trying to bounce here on the weekly. I personally just, I don't know, market saturation, and maybe it's just within the different sports and stuff that I care about. Um, Nike kind of has lost a lot of market share and support from a lot of their customer base over the years. So, not saying it can't reverse, but I mean, look at the trend flow we got going on over here, and then weekly very much is still in a downtrend. So, I'm not going long on Nike here personally. I know some people are, so yeah, I looked at it for you. There's your levels you can monitor. If it can break to the upside and confirm ahead of earnings, ideally, it could fill that gap at 87, but also, just for context, this thing can move lower from this range. So just keep that in mind. If you're in Nike, it can definitely still drop to that 65 range and $50 range. Nick said Nike's the new Intel. I actually am optimistic about Intel, man. I think ultimately, like I've been saying for months now, right? Intel's not going to get like a big positive momentum push in any way, shape, or form until they announce some kind of formal update around a new CEO. So yeah, we traded calls, but there's a big difference between trading short-term calls for a quick spike move, which made huge gains on that move, and locking the gains at that rejection, as compared to trying to add to it longer term right now. If you add long term, like y'all have seen me go leaps on it, going very lightly, very slow on longer term leaps. With Intel, as it's kind of consolidating across this range, it is forming a potential inverse head and shoulders now on the larger time frame as well, so that's good. But really, we need to see if Intel can get some positive news for a new CEO and then push to the upside. One other I need to look at real quick, just because Wells been over here trading it like crazy, and I've seen multiple signs of it today, and feels like I need to go FOMO back into this thing is Celsius. So, I don't know how much y'all know about the energy drink sector and stuff. I know my wife is a huge fan of like Alani. So Celsius acquired Alani, or is acquiring, or something, right? So that's huge. I even noticed even at a couple of grocery stores lately that they've got the Celsius and Alani kind of showcased together on certain shelves. So that's going to be big news for Celsius in the coming months. I'll probably start phasing into a longer term position on Celsius. 12 went over here and he threw the Celsius gift. Wow. Yeah, here, look, I got one right here for you too. I saved it the other day when you shared it. Where is it? Where's the Celsius rocket? We got it in here. Saved it so I could use it whenever we do finally blast off. There it is. It's a Celsius rocket. And Nick keeps asking, when we went to my wife's race a couple of weekends ago, he was like, so how much Celsius was there? Because that's his indication on whether or not we need to long it again. Let's see. Any other tickers you want me to cover? I'm looking at the different chats real quick. What is going on over here? Yep, Lucid. Ed is talking. And some of these tickers just look very wacky when you're looking at the charts, but these premiums are crazy. Let's see. Nick's getting crunk over. Man, did you hit a Celsius before the stream started? Sorry, just looking through this list over here to see if there's any other tickers that, for one, people requested, but also that are worth keeping an eye on. So Baba Another one I'm salty about not adding to my calls accordingly. Another example, right? So I think I mentioned this one to some people. On my screeners this morning, I saw some 140 calls flag, and this was like right after open. I had the order queued and everything, and I was like, you know what, I'm gonna go ahead and jump in these because I'm digging the back test and the bounce, and the China relation thing right now is going in my favor. Vanya, I covered SoFi probably 10 minutes ago if you want to jump back a little bit on the stream. But really salty that I did not jump in those Baba calls this morning because now when I look at them, they are up 178%. Fantastic. So, like, yeah, wish I would have bought those. It is what it is, though, right? So, if the American got the drink, the stock ain't gonna tank. Man, that's going on an ethical trading, or I'm sorry, Rice Custom Design / ethical trading shirt. So, like, I'm gonna put that on one. I gotta drop this over in the chat. Somebody remind me to go put that on a shirt, and I'm gonna have to put some kind of cool graphic that goes with that, and I'll throw it on Rice Custom Designs so people can wear it and buy it and whatnot. So maybe if you win the giveaway next month, you can wear that one. Which shout out to Nick, dude won, which he had the most invites to the Discord, so he definitely had the highest probability of winning, but dude won him some Rice Custom Design / ethical trading swag. I saw he grabbed the this one. He got him. He turns his coffee into trading gains. So maybe I need to make out turn my Celsius into trading gains. I don't know. But yeah, definitely got to make a shirt with if the marathon got the drink, the stock ain't gonna tank. If y'all ever have any funny, cool sayings and stuff that aren't copyrighted from someone, like let me know. We'll throw them on some swag so you can rock them. Any other tickers y'all want me to take a look at? If not, I'll wrap up here in a second. I'll click on crypto while we're waiting. XRP we kind of glanced at. Solana's trying to get its back test and bounce on again, which I'm not loving the kind of weak bounce it got, but I think Solana will rock it in alt season, so not super worried about it. Chainlink is trying to get its bounce going. I just don't like ADA, so even though the chart right here is looking good, I'm not a huge fan. But several others look interesting right now. H-bar getting its pump on at the moment. Alright. On that note, not seeing any additional requests come in, so I will go ahead and wrap up. Like always, if there's any other tickers y'all want me to take a look at or anything, feel free to send me or first off, tag me in a lounge or send me a Facebook message or something. Watch out for scammers and spammers on Discord. Always check the Discord join date, or tag me in the lounge if you're going to shoot me a message so I know, and then we can message each other. But yeah, if there's any other tickers y'all want to see, feel free to reach out. Let's see. Sorry, reading a message from somebody, making sure that they weren't wanting me to cover something else. But any other stuff y'all want me to go through, holler at me. We'll take a look at it. And if you are joining this after the fact and want see value in it and whatnot, feel free to like and subscribe and all that good stuff. But thanks, everyone. Have a great evening, and we'll be back at tomorrow.